All right, guys, let's do it. It is Thursday, July 28th. It's 10:42 a.m. and this is a market update and kind of macro catch up at like where we're at. Finally back from Italy, Florida. Now I'm back charged up and I'm ready to jump into the charts. And yesterday I started to do that and really dig into a couple key charts that we always want to keep our eyes on, and I found a lot of good stuff. So I'm going to go through the Discord because I sent all on the Discord in writing so we can go back and look at it. So what we're going to look at right now is the U.S. Treasury bond chart, the 10-year bonds. So the economy is fueled by debt. So a simpler word for a bond is debt. So when bond yields rise, that means entities are dumping U.S. Treasury bonds because the interest rate is going higher. But nonetheless, since the demand is going down for U.S. Treasury bonds and the supply is getting bigger, the higher the interest rate is to compel and entice investors for a better rate of return on their investment, which bonds are generally known as a safe kind of investment since it's backed by the government. So interest earned on them is often pretty low regardless, but especially with inflation being at 10% for easy math, let's say bond yields are at 3.33%, you would still be technically losing 6.66% of your purchasing power per year. Inflation's at 10%. So the cost of everything is going up by 10%. And you're all in bonds, right? And you're only gaining 3.33%. You're still losing 6.66% of your purchasing power per year. So I hope that makes sense. We want to watch the debt market because the debt market will give us a good hint into the macro direction moving forward for other assets like stocks, cryptos, and what have you, because everything basically runs off of debt. And we also want to pair the bond chart with looking at the DXY chart, the dollar, because technically the dollar is a liability and it's not an asset. Since if you're holding the dollars, you're basically in the market. Since inflation is so out of hand, just having cash in the bank, you're guaranteed to lose 10% per year. So if you're holding dollars in the bank, it's good to know when the dollar may strengthen or weaken, because then we can make a better decision for how much USD to hold in the bank to be able to be diversified. So lastly, I look at the US NAS 100 to gauge what stocks are looking like as far as the Stargate signals goes. And then once seeing these three charts, I then get into the crypto charts. In this exact order, I look at the total crypto market cap to see how the cryptocurrency market as a collective is looking as far as the signals. And then I look at the total 3 chart, which is all the cryptos collectively besides Bitcoin and Ethereum. And that's better for a more holistic altcoin analysis. So let's dive into the 10-year Treasury bonds chart right here. So you can see that if you look at the 1, 2, 3, 4, 5, 6, right? Look at the vertical lines, like the vertical yellow line, and that's the Stargate signals to sell now. And this is a 2-week chart, I believe. Yep, 2-week chart. So you can see that when the first time it happened, bam, right there, it sold off from the vertical yellow line. And then 2, right? If we're looking at the 2, bam, right there again, sold off from that yellow line. And we're talking from 1995 to 2022 right now. So this is a span of like 27 years. The last 5 times that these Stargate signals flashed on the 2-week chart, a sell warning and a sell now, it was the top. It was the top. So the first time, bam. Second time, bam. Then you look in the middle of your chart, the third time, bam. The fourth time, bam, went down. And then the 5th time, which was back in like 2018, bam, went down as well. And then now we're sitting at number 6. And is the same thing going to happen, right? It's been 100% right for the past 27 years. So based off historical probability, I would say this is going to play out as well too. But you know, things could change, but the odds of this playing out are greater. So we're looking at the 6 right now, and you can see the vertical horizontal yellow lines too acting as like a support and resistance. If you look at point number 4, bam, we went up to it. We had the sell signal, plus we hit that horizontal line, we sold off. Number 5, sell signals, we went up to the horizontal line, sold off. Now we're at number 6, at the horizontal lines, we have the sell signals, and it's looking like we're going to sell off. I believe today we actually broke through the bottom of that horizontal yellow line too, and that's exactly what we're looking for. So bond yields are going to come down. Bond yields will come down, and we can see that in 2018, when the bond yields kind of sold off, I believe that was like the bottom of our bear market back at this point right here. Yeah, around like 2018 in the middle. Yep. I'm sorry. At the end of 2018 right here, that was the bottom of our bear market. And now it's looking like we might be at the bottom of our bear market as well right now too. So this is a good sign. Good sign right here as well too. We don't want a rapid rise of the bond yields just yet. That would be bad for the overall world economies. But now we'll go into the oscillators. So this is the same chart we're looking at, like the bond yields, but we can see that we have the same kind of reaction of the RSI at each top as well too. We have like this double top here. See 1 2 1 2 1 2 1 2 1 2, and now we're getting that second point right there, and then everything's lining up with those sell warnings and then the horizontal line as well too. So it's likely this is the top for it. Then you can see the TSI. We have like a first hump, second hump, go down. So bam, bam, right there, bam, bam, there as well too, there as well too, and we're on the second one. You can see the similarities for a top. Now if we go to the stock RSI, we can see that whenever we get below the 50 line, that's when we know we're selling off. So that at that point, that's when we sold off. That point sold off. That point sold off. That point sold off. Here as well too, and we're peeking our head below the 50 right now. So it's a likely we're out of the woods as far as the bond yields, interest rates coming down. So now let's dive into the dollar chart. Let's look at the dollar chart. All right, so right now we're looking at the US dollar chart. So once again, a huge macro signal here. Like we're looking at the 2-week chart, I believe. No, the 3-week chart. And if you look here, you can see that since like 2015 and even 2011, the Stargate signals on the 3-week chart have called it to a T. You can see we have the vertical green, prepare to buy soon, vertical blue, buy now. Then we had our Nike swoosh, these parabolic lines coming up. We had our sell warning, so our sell now. This was the bottom of our bear market back in 2015. And then we kind of just ranged with the dollar until the end or the beginning of 2017. We had our sell warning and our sell now. And this kicked off a huge run in cryptos with the dollar coming down here in 2017 to 2018. That was a huge rally in the crypto market. And we had our sell now here. We came down for our prepare to buy soons. And then we had our buy now. This was our bear market, or the start of our bear market in 2018. To our bear market like bottom in 2020. Yep, in 2020. And then we had our rally here as far as 2021 to like March 2020 to like early 2021. And then we had our prepare to buy soon, our buy now, and now we're getting our sell warning up here. So and we're in that Nike swoosh pattern, the parabolic lines, right? So it's looking very similar to back like 2014, 2015. And the our type of correction as far as the Bitcoin price looks kind of similar to that time too. But we can see that we're getting close here because we have our horizontal line right here. That's that Fibonacci retracement, or I'm sorry, Fibonacci extension that we had called that around 109 was going to be a level that would be resistance for the dollar. If we were zooming out, we put the Fibonacci's on, you can see this vertical, the horizontal blue right here, this horizontal like red. Those are Fibonacci extension levels. And then we came up to it to a T and we got rejected by it. And then we had our sell warning here, and we're just waiting for that vertical yellow sell now to know, all right, the dollar is done. And then, so if we also break this bottom trend line right here too, that's given us more confidence to know that the run of the dollar is over. So once again, huge macro signal flashing, a prepare to sell soon. Once the yellow confirmation sell now has come in, it's lights out. So the rise in the dollar looks similar to the rise of the dollar back in 2014 and 2015, shown by the two white parabolic lines right here. I call it the Nike swoosh. So once the lower trend line is breached, so once this lower trend line is breached right here, like it was back in this time, now we're looking at this time, it's likely the dollar will top in the macro trend. And when the dollar heads down, other assets like cryptos historically have trended up for another big multi-year bull run. It was crazy back here. It's crazy back here too. So the Stargate signals have nailed the macro bottom and macro tops of the past 10-ish years for the dollar. That's nothing to bat an eye over. So Fibonacci targets, as mentioned some weeks ago, was around that 109-ish area where we said we'd likely find some resistance, which we did. So let's hope to see it continue, because then the dollar would breach the lower white trend line here, and the yellow sell now confirmation alert would come through, and that would signal to us that the dollar run is over. So that would be big. Now let's look at the total crypto market cap. Let's look at that. So the total crypto market cap is showing us the bottom is in with multiple indicators here. So between the pi cycle bottom indicator that just flashed, which previously when it did that, it marked the bottom, I believe, of the bottom of the bear market in 2018. It did. As well as now it is officially flashed. So this is huge, because to a T, bam, right at the bottom. Bam, right at the bottom. It's likely, we could come back down, just like, we went up, come back down, but then we go. We really get out of there. So between the pi cycle bottom indicator that just flashed, which previously flashed for the bottom of the bear market in 2018 here, as well as now it's officially flashed, it's huge. So the Stargate signals had flash sells now directly at the top, and then pi cycle top here as well too. But the Stargate signals flashed right at the top, and flash buy nows at the previous 2018 bottom as well too, and it's flashing right now. So any day now we're going to get that vertical blue line for the buy now signal. And with our new indicator, you see the long entry right here, the short entry right here. So we're waiting for that vertical blue line to know that, all right, confirm bear market is over and we're going to start rallying back up. So just like it called the tops, and this is the 1 week chart, sell now right at the top of the bull market of 2017, and then sell now, and then right at the bottom of the bear market we had our buy warning, and we waited. That's why we wait for the blue, vertical blue. This is another 50% drop here. So then we got our pi cycle bottom, and then we got our vertical buy now right before the rally, and then we went on our multi-year bull run, got our sell now close to the top here. And then we just got our vertical buy warning. We got the pi cycle bottom, and we're waiting for our vertical buy now. And it's going to come any day now here soon. So this is a crypto total market cap. This is all the cryptos as a collective. It's huge, guys. We were saying it weeks ago before I left for Italy that, we're going to scale in our buys over the next 3 weeks, because we're at the bottom and it's looking more and more like it every day. So let's keep going here to the total 3 altcoin market cap chart. So the total 3 altcoin market cap chart, this is more zoomed in look. This is back in October, November of 2021. We had our sell warning, our sell now. It's the 1 week chart. And then now we got our buy warning back here around May of this year. And now we're just waiting for our vertical blue line for our buy now. So just as it called the top over here, it's looking like it's about to call the bottom here as well too. So we're waiting for the 1 week buy now with the vertical blue line to flash. And then we're going to know. And this is just for the altcoins and no Bitcoin, no Ethereum. So this is looking great. Now let's look at the US NAS 100 for stocks and the weekly chart here. So this is all the way back to like 2004, all the way back then. So this is about what? About 18 years. So yeah, 18 years. So the vertical dash lines here, this is the key. This is the only thing that's getting the red flags up. So to the left is the period of the Great Recession back in like 08 to 09. Yep. So September of 08 to April of 09. And you can see that we had our first vertical buy warning back here. And then we got our buy now, but it was a fake out. So this was at the beginning of the vertical dash lines. And then we can see here we have if I can zoom in. Yep, I can zoom in. Vertical buy warning right here. We got our first one. So, and we're in the dash lines. So only red flags that we have is if this is going to be a fake out to, get people back in the market. And then we have one more crash down. And then that would be our bottom, because back here when we had our second vertical green line, our prepare to buy soon, and then we had our buy now, that was the real bottom. And you would have nailed and bought the bottom of the Great Recession. and then you would have rode this all up here. And then we have this trend line stretching back from 2009 too, that support, you know, so that's why it could be a possibility we come down here. The key is looking at the bottom indicators here. So if we look down, the reason why I have the red flags is because if we're looking at the TSI on the US NAS 100 chart, you can see that the horizontal yellow line here, every time we're above it, we've been on that, you know, bull run for the markets. We've been going up here like that, and there hasn't been any extreme pullbacks. But right now, I mean, back in the 2008, 2009 recession, when we had that kind of severe crash down, and you can see the red flags here, the TSI breached that horizontal yellow line. And once we made our way back above it, that's when the bear market was over there. So the only thing is right now, we breached the horizontal yellow line. So that's why we had to keep that in mind as far as this being a brief kind of rally for the stock market, and then one more pull down to mark the bottom. Because you can see the dashed lines here and here are lined up with this chart right here. So that's definitely going to be on my radar as far as once this gets back above, then we'll know the bear market's over as far as the US NAS chart. And then as long as we're down here, we got to be, you know, cautious of that. So, yep, like I said, this is the TSI. The same dashed line on the left are the Great Recession. On the right is the present day. What has me have the red flags up is we breached below the horizontal yellow line. We already had one vertical green line. So there's a potential for that to be a brief rally, slam back down for a second vertical green line, just like back in 2008, 2009. And then I'd say that would be the true bottom. That's if the scenario plays out, though. And it's something to take note of, because since stocks led the way first in crashing back in late 2021, if this plays out on stocks first, it could spill over to crypto. So that's why I'm paying attention to it, just in case. Also note that whenever the TSI is above that horizontal yellow line on the weekly, it's a great time to be long stocks and ride the bull wave, because to a T, the chart never had a really brutal sell-off or a crisis until that yellow line was breached. So that's good to know going forward for the people who like to flip stocks. So lastly, I'm going to get into this this last chart right here. So when I was in Italy, I really learned a lot about just time and just how a lot of things from the past, like history and just what time is, and how they during that time would measure time and measure like the calendar and just measure the days of the year and just like the different cycles within cycles, and what time is, the moon, the sun, and how people back then would tell time. And it really opened up my mind to see the charts in a different perspective as well. So check this chart out. I believe you guys have access to this indicator too. It's the 4 seasons, 4 phases indicator. If you notice any weird patterns with it, as far as like coincidences and things lining up as far as a cycle, share it with me, because I believe this stuff's crazy. So when I see stuff that lines up, I'm like, yo. So definitely share that with me if you find anything. But before I get into the moon cycle and the 4 seasons and everything, here's the scenario I think is going to play out. So I put this all in the Discord yesterday. Excluding any black swan events or anything macro world disruptive, I believe Bitcoin will hit $33,000 to $36,000 and have a brief pullback, then make its way up to $42,000, $50,000. That range, before needing to assess the chart and indicators and everything. So like we can plan all the way until 2025, but as far as planning that far out, it's hard to do that. We need to look at the facts in the present day as well too. So I see similarities of the fractal patterns that played out exactly last year, like to a T, guys. But as far as the white circle with the 3 red circles in it, the white circle is the whole entire sell-off phase. This is the correction from May until July of last year, where we went from 60K all the way down to like 30K. And so that's that whole correction right here, right? As far as the white circles with the 3 red circles in it, the white circle is the whole entire sell-off slump phase last year around May until July 19th, when we looked like we were going to fall through. Like you can see right here, we didn't even have bodies closed back here. So right here, it looked like lights out, right? But instead, we popped up aggressively and made its way out of there, and we bottomed at that point. And we went about double in 3 months. So we went from 30K to 60K in 3 months. So if you notice the 3 red circles within this white circle, you'll see the darkish gray circles here. You see those darkish gray? Those are the new moon phases. It represents the new moon. So within that slump period of last year, we had 3 new moons until we put in our macro kind of swing bottom here. So at each new moon during that time period was a local bottom as well, because we came down, had our new moon, local bottom, went up, had our new moon, local bottom, went up, had our new moon, local bottom. 3 new moons made up this whole entire from top to bottom, and then we got out of there. So as you can see, a lot of 3s in there as well too. 3 is the magic number. Now notice where the first new moon occurred, right? The first new moon occurred right here. So that was our first local bottom in the May sell-off. It happened at the tail end of the blue shaded area on the chart. So we see the blue shaded area. It happened at the tail end right here. And if you kind of see right here, you see that 5. So that number 5 next to the new moon is indicating cycles within cycles. So the numbers are hard to see, but you'll notice next to the different phases of the moons are the numbers 1, 3, 5, and 7. And then it repeats. So number 5 is when the new moons occur. So you see new moon 5, new moon 5, new moon 5. Okay, so now if you notice the set of second red circles over here, the second local bottom, which was our second new moon, which a year ago happened to be our second local bottom, and present day looks like our second local bottom. Ironically enough, both of them happened to on the summer solstices. So here's our first red circle. We had it at the tail end of the blue shaded area. We had our new moon, our 5, and it was our first local bottom. Then if we look over here, we had at the tail end of the blue shaded area, our first local bottom, which was a new moon and a 5. And then we kind of rallied up a little bit here, just like we did right here, into the yellow shaded area, which was the summer solstice. So at the start of summer solstice, we had our second local bottom, we had our new moon, and we had our 5 right there. So we had our first one at the tail end, came up, and then right there we had our second one. Just like over here, we had our first one, our new moon went up, our second one, second local bottom, new moon 5, and it was at the start of summer solstice right here, just like back here. And ironically enough, both of them happened at the same time. So like our first local bottom was around like May, in the middle of May, bam, right there, bam, right there, middle of May. Then our second one at the kind of middle of like late end of June, summer solstice, bam, right there as well too. And then we kind of rallied up a little bit, and then we came back down for our third local bottom. So for our third local bottom, this is what marked the bottom on July 19th of last year. So July 19th of last year is right here. It was our third new moon, our third local bottom, and that was the moment the macro bottom was put in. And we made our way out of the woods to double in price in 3 months. So keep in mind, this is the Bitcoin chart. So usually when Bitcoin doubles, we're looking at like a 4x on altcoins in 3 months. So present day, it looks like we marked our bottom around July 17th and 19th, as I stated back in like, I think it was like July 1st that I said that. But it's all coinciding all exactly with the same pattern as exactly a year ago to a T. So I took the fractal that happened after it and I copied it over to present day, and it perfectly lined up with the Fibonacci retracement. So it all looks good to me. So we put in our third new moon, the 5 right there. It was our third local bottom. And it looked like we're going to fall through, but just like back here, we popped up on out of there, and we're starting to head up even more today now. We're at, I think, over 23,000 for Bitcoin as we speak. So we can see that I took this whole fractal, so what came after it, and I put it right here, and it perfectly lined up with some Fibonacci retracement. So I took this top to this bottom, just like how you could take this top to this bottom, you could put fibs on it, but we're talking this move right here, this swing high, swing low, and I put the fibs on it, and we can see that this fractal from back here lines up with fib retracements, where we'd pop up to like 29,000, come back down, retest like 26, going all the way back up to like 33 to 36K, coming back down to retest. This looks like an inverse head and shoulder, and then we'd break through. And we would then retest like $42,000 to $50,000 before needing to reassess the chart. That would happen around like October. We would get to the 42 to 50. By like late August, September, we would get up to that 33 to 36. So this all looks good to me. Everything's lining up. to a T as far as moon cycles, 4 seasons, as far as fractal patterns, as far as new moons right here, and the cycles within them. So I thought this chart was pretty interesting, that kind of the cycles of astronomy can predict kind of human emotion, because all the chart is human emotion, fear and greed. So people are fearful here. So around new moons, people are generally more fearful. Around full moons, people are generally more greedy, it seems like. See, full moon right here, greedy right at the top. Full moon right here, greedy right at the top. It's pretty crazy. But also, Elysier had asked a question. He had asked like why Elon Musk and everybody was selling, and I said Elon Musk banks on the government subsidies money to fund his projects, I believe. So what the government tells him to do, he's going to have to do it. Also, it seemed like all the celebrities that came out saying they were buying crypto all came out ironically at the top of the market. So if now they are saying they're selling, then I hope that that is the case, because I'm sure months from now we'll be saying that marked the bottom. I believe Tesla announcing that they bought Bitcoin was at the top of the market as well last year. So if that's the case, then that just tells me even more we bottom. But that's just my opinion. It's hard to trust that these celebrities have our best intentions in mind and want to give us a seat at their table. If anything, they're saying they're selling right now in the hopes that the retail market sells too, so they can buy a lot more coins. Remember, for every buyer, there has to be someone selling. Also, I'll never forget back in 2018, it was hella scary to be in crypto. Every major bank CEO and celeb was trashing on it. Your friends, your family were trashing on it and saying it was good for nothing and was worthless. And it was very challenging to ignore the noise and hold confidently at the time. It turned out while every major celeb or CEO was trashing on it, a bunch of Ivy League schools bought, like, I believe it was like Yale, $500 million of crypto for their endowment funds. They were buying the bottom, and these bank CEOs were gearing up their businesses in the future to be ready for crypto, meanwhile telling people it was worthless. A lot of mind games out there from the mainstream. Try to block it out by doing your own due diligence, by finding out what they're doing, not what they're saying. 100%. 100%, guys. So I just wanted to run through what I had said on Discord. Hopefully it all made sense. I'm going to cover individual cryptos like XRP and all the ones that we track today as well too. I'll either get that video out today or tomorrow. And I'll really dive in deep on those charts too to see what the individual coins are telling us and which ones may outperform other ones. So that's it for this market update. I'm going to do a newsletter as well too. I'm going to send out emails as well about key events and dates to keep in mind for the rest of 2022, because this is the year, guys. November 2022, Big Bang ISO 222. Been waiting a long time for this, so everything's gearing up just on time. So that's it, and I'll see you in the next video and the Discord if you guys have any questions.